Hello, everyone, and good afternoon. Thank you for joining us for our virtual open enrollment webinar. At this time, we will go over the Optum Bank Health Savings Account benefits for plan year 2020. Before we get started, I would like to brief everyone on a couple of housekeeping items. All attendees are muted and will remain muted throughout the presentation. If you have a question, please type it in the chat box located on the right-hand side of the presentation screen. Kindly be informed that if you do type a question in that chat box, everyone attending the session will see your question and your name. So if you have a question that is sensitive or confidential in nature, we encourage you to reach out to the County Benefits Division or your department's benefits ambassador. Lastly, today's seminar is being recorded and a copy will be placed on the Benefits Open Enrollment website. At this time, I will turn it over to our presenter, Van Deshita Bendel.
Thanks so much, Nedra, and welcome everyone to the overview of health savings accounts. Open enrollment is your once-a-year chance to make a selection for a health plan that meets your needs and allows you to save income tax-free. An Optum Financial HSA may work well for you. A few items about it. It helps you save on for medical expenses, save on taxes, and save for retirement all at once. You may use a payment card, which is provided, or anywhere that digital wallet capabilities are accepted. You can manage your account on the go with the mobile app. And there are quite a few engaging videos, courses, and flyers and webinars that may be accessed via the portal or via the mobile app. Today, we're going to take an overview of HSAs. We're going to look at spending funds on healthcare expenses now and looking at spending funds in the future into retirement. Starting with the perks of an HSA, first is portability. An HSA is your individually owned account, and it will move with you. If you change employers, if you are laid off, if you retire, those funds are yours until you spend them. And when you deplete those funds, your account will then be closed. The second point is that this is an individually owned account. The company cannot see the items that you're spending your funds on, and these are your funds to do with as you wish. There is a great deal of contribution flexibility with an HSA. You can start off the beginning of the year with one amount, and as you move forward through the year and realize perhaps you may not be setting enough aside, you can change that amount. Likewise, if you find you're contributing too much during the year, you can reduce that amount. Once you hit a specific investment threshold of $1,000, you can invest your funds into a variety of options. Those funds, again, are yours to keep. Finally, you can use the funds on medically appropriate items under age 65. Starting off, what is an HSA? A health savings account is an account that allows you to save funds on a tax-free basis, grow your funds tax-free, and spend them on qualified expenses tax-free. You're eligible for a health savings account, first off, if you are enrolled in a high-deductible health plan. You may not be covered by any other plan that is not a high-deductible plan. You may not be enrolled in Medicare, TRICARE, or TRICARE for Life. You may not have received VA benefits within the past 3 months other than preventive care. Of course, if you have a disability rating from the VA, this exclusion does not apply. You may not be able to be claimed as a dependent on someone else's tax return, and you may not have a healthcare flexible savings account or medical HRA account. If it is a limited purpose FSA or HRA, these are allowable. If it's not clear whether or not you're eligible to participate in an HSA, we suggest you reach out to your tax or financial advisor just to clarify whether or not you can enroll. You may have heard of the triple tax advantage of an HSA. By that, they mean funds go in on a pre-tax basis up to the IRS limits. The funds grow on a tax-free basis through interest and investment growth, And spending your HSA dollars on qualified expenses are also tax-free. You can take an example or take a look at the example of Jay on the right-hand column. She's 30. She's started a new job and decided to open an HSA. Jay contributes $200 a month and uses about $500 a year to cover some health expenses. This is a very simple calculation of how Jay saves with her HSA. You can see the $200 going in. The balance at the end of 1 year is $1,900. And then looking forward to age 65, following those same guidelines, she will have saved $66,500 in her HSA account. There are several things to consider when you're choosing how much you set aside for your HSA each year. We suggest you take a look at your household and determine what type of prescriptions are being filled each month or each year. Are there any planned procedures, any braces coming up for any of the younger family members? You may want to, take a look at your health plan deductible and determine whether or not there's another family member that's going to be joining. Also to consider is when you plan on retiring. The IRS does determine how much can be set aside each year in pre-tax dollars. For 2026, the amounts have been determined to be $4,400 for individuals and $8,750 for family. Once you reach age 55, you are eligible to contribute an extra $1,000 per year. If your spouse is also age 55 or older, they too can add $1,000 to an HSA. This cannot be added to the existing HSA. They will need to open one in their name to add that $1,000. All contributions do count toward the IRS determined limit. So anything that the County of San Diego contributes on your behalf does count towards that maximum. How can you make deposits into your HSA? Most commonly, folks do contribute through the payroll deduction to save on FICA taxes. You can also arrange for a one-time or recurrent electronic transfer from another account. People are able to connect their personal checking and savings to their HSA account to make such a transfer. Finally, you can mail a check to Optum Financial to put funds into your account. One thing folks are not often cognizant of is that you have until the tax filing deadline to make an HSA contribution to the prior tax year. For example, if you don't contribute the maximum amount for 2025, you have until the tax day in 2026 in order to make those contributions. If you would do so, this would be outside of payroll interaction. This would need to come directly from a personal account connected electronically, or you would send in a paper check to do this. These funds would need to be designated as going toward the 2025 limit. Earlier, I mentioned investing with your HSA. You do need to have a minimum account balance before you can begin investing. That investment threshold is $1,000, and the minimum transfer amount to invest is $100. Contributions, or rather transfers, can be made in $100 increments. There are two different methods for investing using the County of San Diego HSA once you hit that minimum threshold. First of which is what's known as the robo-advisor or digitally managed investments. This is through Betterment. Essentially, there's a brief questionnaire that you would be required to answer. It has some questions about when you intend to retire, what your financial goals are, and what your comfort is with risk. Based on the feedback to those questions, a slate of funds would be recommended for you. You could accept those suggestions or opt to make selections of your own. The second option is through mutual funds. There are 32 pre-selected funds, which has got quite a variety of account options. You can opt in to choosing the mutual funds yourself or allowing the funds to be chosen through Betterment. When it comes to spending your HSA dollars, we're going through a list of qualified medical expenses. This list is not exhaustive, but certainly gives you a good idea where to start. Anything along the lines of eye exams, contact lenses, or glasses are eligible to spend HSA funds on. Orthodontia, physical therapy, chiropractic care, prescriptions and prescription refills, mental health care, and chemical dependency care, along with medical copays and deductibles. In addition to this list, there is a medical expense tool at optum.com, qualified expenses. This is a neat tool in which you can plug in a service or item you're considering pursuing and seeing whether or not these are eligible expenses to spend your HSA funds on. In addition, there is a comprehensive list at irs.gov to help you review whether or not an item is HSA eligible. So now that you've opened your HSA, how do you access your account and your funds? There are three main methods of doing this. First of which is online, going into the portal to check your balance, make deposits, pay bills, submit receipts, reimburse yourself, and manage your investment activity. There is a mobile app that is also available for both iOS and Android phones. Everything that you can do online can be accomplished via the app. Again, paying bills, tracking payments, checking balances, searching for qualified medical expenses, calculating contributions, and also updating your beneficiary. Finally, the most common way folks access their funds is through the payment card. You can swipe your card at your doc's office, at the pharmacy counter, at the chiropractor, or you can go online and plug the number in to pay for a medical expense. A question we commonly hear is what happens if I spend my HSA funds on non-qualified medical expenses? If you're under age 65, you would pay income tax on the funds and a 20% penalty by the IRS. If you're age 65 or older and use your HSA funds for non-qualified expenses, you pay income tax on the funds only. Healthcare expenses are absolutely one of the biggest financial worries in retirement. The Milliman Retiree Cost Index has estimated that in 2024, for an average healthy 65-year-old couple retiring, they can anticipate spending up to $395,000 on medical expenses from the time they retire until their death. This is going to include premiums for Medicare, copays, deductibles, and items under Medicare which are not covered, such as glasses, dental work, and hearing aids, items which are very common as we age. Taking a look at the variety of common financial accounts that folks use to plan for retirement, let's start at the bottom looking at the 401k, the 403b, and traditional IRA. Funds go into those accounts on a pre-tax basis and they grow tax-free, but they are taxed upon distribution. With a Roth IRA, the funds are taxed upfront. They do grow tax-free and they are distributed tax-free. The HSA is pretty much the perfect combination of all those items. Funds go in on a pre-tax basis. The growth and investment growth is tax-free, and distribution for items which are eligible expenses is also tax-free. This makes an HSA a very powerful tool for long-term savings. Looking at HSAs in retirement and strategizing using your HSA as part of this long-term strategy, you need to understand that you can no longer contribute to your HSA once you're enrolled in Medicare. You can, however, maximize your after retirement income. You can continue to invest your HSA funds provided you have that threshold met. You can continue to do so. We recommend people build up their HSA to cover future medical expenses while they're working. You can then use the HSA to pay for qualified expenses in retirement for items such as Medicare premiums and qualified expenses, deductibles, copays, and coinsurance. There are three main types of Medicare that folks tend to enroll in. Part A is for hospital and inpatient care, Part B for physician and outpatient care, and Part D for prescription drugs. We're going to look next at some health account resources for your HSA. Again, the mobile app can be accessed via the App Store. Extremely convenient to have this on the go. You're able to see your balance as you're at the doc's counter or pharmacy counter picking up your prescriptions. You can search for medical qualified expenses, check your balances, pay bills. In addition, as mentioned earlier, you can access your account and funds both online and via the app. Each of those functions offers the access to the same information. And also you can use a payment card to pay at a doc's office or online. Reminding you of the perks of a health savings account. Portability, those funds move with you as you travel through your work life. They roll over year after year and they do not expire. If you change jobs, they go with you. If you retire, the funds go with you. The funds are yours until they are exhausted, until you use them all. An HSA is individually owned. This is not owned by the company, although they may contribute on your behalf. You do have a great deal of contribution flexibility. You can change the amount that you contribute throughout the year, either increasing or decreasing. There's a wide variety of investment options once you hit the investment threshold of $1,000, should you choose to do so. Finally, you can use the funds on eligible expenses. If you do not use the funds for eligible expenses before age 65, you may be subject to a penalty and taxation. And that wraps it up for now. Nedra?
Yes. Thank you, Suzanne. Looks like no questions have come through as of yet. If anyone does have questions after the fact, we can advise you to reach out to the benefits division or your department's benefits. Happy to answer questions you have. Sound decision. And I believe there's still a question. So I'd like to thank everyone for joining us again and have a great day.